sound is correct. Yes. Why not typing this?
Ready?
Yes.
Okay, cool. So last sector meeting of the term. Our final fund meeting's next Tuesday, so I'll just be reviewing everything that's happened in the term. I know there's only been 3 sector meetings this term. It's been pretty hard to schedule them with all the other LUUTIS events. Like we've accidentally had this one when the Bloomberg term has been rearranged to as well. So sorry about that. But yeah, so just a quick highlight for today. I need to read that out. Okay, so trade wars. Discussed that quickly just now. So Trump today said that the phase 1 deal with China may not happen until after the next presidential election, November next year. There's a few more other things to do with trade wars which happened yesterday. Anyone read about those? Anyone know what they were? Something about France was one of them.
Yes.
Anyone know what that was?
Related to taxes.
Yeah, and there's one about France. There's also one about Argentina as well. Does anyone know?
Is the Argentinian one about the new government?
I'm not sure anything about the Argentinian government, but it's to do with the metal tariffs with Brazil and Argentina. Then the French thing is basically like the French government are thinking of putting a tech tax on the big US tech companies like your Googles and Amazons, and basically America are threatening to retaliate by putting a $2.4 billion tariff on like French luxury goods like champagne or your Louis Vuitton bags, something like that.
And it's funny because Macron and Trump seem so big friends, and now they are kind of punching each other.
Yeah. And what's the big summit happening today and tomorrow? Yeah, NATO summit in London. So I think that sort of leads on to actually one of my following bullet points. So I think the Conservatives are pretty scared of what Trump could have to say because they're worried about him sort of meddling with the UK election by sort of declaring his backing for Boris Johnson. Obviously, the British public just hate Donald Trump. They hate Donald Trump, so if they think Donald Trump's associated with Boris Johnson, they'd be less likely to vote for him. And then also you've got what was I going to say? Oh yeah, the threat of there's been a lot of stuff about like the possibility of like privatising the NHS or certain US companies getting access to the UK drugs market. Voters don't like that, so if there's a possibility of a Trump meddling with that US UK trade deal or something like that, markets aren't going to like that.
He said today that he would be happy with any prime minister.
Yeah, so it's good that he's sort of sat on the fence with it rather than getting involved. What else have we got on here? Oh yeah, Labour closing the gap in the polls. Anyone know anything about that? Elections next Thursday.
I think it is a very tricky one to predict.
Yeah. I think, most of the polls originally was suggesting a Conservative majority, but now there's a couple that are suggesting a hung parliament. Does anyone know what a hung parliament is?
Ladies at the back.
When you don't have enough for a majority, so and then you need to basically find someone to get a coalition with.
Exactly, correct. So yeah, it's the possibility of a hung parliament. In that case, the party with the most seats gets the first opportunity to try and get a coalition. So in that case, it most likely will be the Conservatives. If they can't get a coalition, then the remaining parties will be given the opportunity to try and get a coalition themselves. Possibility maybe a Labour SNP coalition. I don't really know. But yeah, I'm thinking that we can try and do some sort of trading with the UK banks in preparation for Thursday. Not sure what yet. Not sure if you guys got any ideas, but we can discuss that later. Anyone read about the new chief of Germany's junior member of the governing coalition? German? Anyone read about that?
Yeah, 2 chiefs were elected, and I think they are not really keen to continue the great coalition with Merkel, but it may seem that they will just hold on to it till 2021, till the next elections, and then when Merkel steps down as the Chancellor of Germany, then
Yeah, and there's something about like the new leader of this SPD isn't as keen on Merkel's tactics in balancing the budget. So I suppose if that coalition just falls apart, then a lot of volatility in the German markets. Yeah, wants to challenge Merkel's commitment to balanced budgets. Cool. Anything to add on macro update?
No, I mean just to say that the German DAX has been very, very dependent on what the euro does.
Yeah.
Against the dollar. That's right.
Yeah, just quickly going to run through some of the financials update pretty quickly. So Virgin Money, shares at 20%, so losses from PPI not as bad as feared. I was wanting to answer about this anyway the other day. Do people all know what PPI is?
I asked this yesterday to Matt, so feel free to not know it.
Because we were all pretty young when it would have been kicking off, so does anyone want us to have a go?
Is it like an insurance or some sort of it's sold?
Yeah, so payment protection insurance. So my understanding of it is that people would pay however much a month, and then if they then lost their job, the bank that they got the insurance with, or whoever they got the insurance with, would continue to make some sort of payment for them, so their mortgage payments or their bills, their rent or something like that, just so they can keep ticking over for a few months until they find a job again. And basically in the early 2000s, all the banks, particularly in the UK, had pretty low profitability, so they were looking to find new ways of generating this profitability. And one of those ways was PPI. In the 2000s, obviously there's dot-com bubble, but after that, pretty steady markets. Unemployment was fairly low, so these products had really high profitability on them. So people were making their payments, but the banks never actually had to step in and actually pay these people's mortgages or bills or whatever, because things were going well. So they basically were trying to sell these products quite a lot, and mis-selling them in many cases as well, to try and just get it sold to people that didn't need it, or people paying too much for it, things like that. And then the backlog from this has been £60 billion of compensation to people. So banks have been heavily hit by this in the UK. And then in August this year, I think I might mention this in a previous meeting, there's basically the deadline for getting your PPI compensation. So now, in theory, future earnings quarters shouldn't be affected by PPI. But yeah.
This PPI reminds me to the famous toxic mortgages in the USA before the financial crisis.
Yeah.
I mean, that I guess the banks thought that, let's...
Yeah, just trying to sell stuff. But I suppose the thing with this is it didn't actually inflate asset prices or anything like the US. It's a bit different, but yeah, fair enough. Was that a question? Oh, sorry. Bo, RBS FinTech, mentioned this as well before, got released last Monday, spent 100 million on it, no, 100 million, sorry, not 100 million, 100 million quid on it. Challenge like the likes of Monzo, it's going to need a lot of people to be using it to make it profitable and make any difference. Goldman Sachs posted this article in the group. Basically, they're aiming to become an asset management powerhouse. Asset management has sort of a lot more steady revenues than, say, investment banking or your markets division, because they're really volatile. They go with the cycle a lot, whereas asset management's a lot more steady, and wealth management as well. Moody's downgraded outlook on UK banking sector to negative. Did anybody read the article I posted earlier? Yeah.
Was it not to do with because we've had such low interest rates for so long, and basically because of Brexit and all the uncertainty, and whether or not we do get a free trade deal? I think they were thinking that we will get a free trade deal, but even so, they were still saying profitability of banks isn't going to be as good.
Yeah. And one of the numbers in the article was pretty shocking, and is that the UK banks year to date are negative.
Yeah.
And I mean, it's really difficult to find any kind of asset this year to be negative. So there we are. And I'm pretty sure that Spanish banks and all of that as well are doing pretty badly.
Yeah, exactly. Anything else on that? No? Cool. So Monzo, first sort of European-based fintech to launch in the US. The rules out there are a lot stricter. It's a lot harder to get a banking license. So they're basically trying to break into the US, but I think they're doing it a lot less aggressively than they did in the UK. Not spending that. They're trying to keep it pretty small for now. But obviously, they're not a listed company anyway, so it doesn't really affect us that much. Big shake in the brokers market. I'm not going to talk too much about that because I think we've got a pitch about that later on. Basically, like the two big players, Charles Schwab and TD Ameritrade. So Charles Schwab is acquiring TD Ameritrade 1 and 2. There's a lot of sort of execution risk with that. Will it go through? Will it not? Basically, in the broker market, a lot of the fintech companies, like the likes of Robinhood, charging like next to no fees, sort of 0 fees or whatever for broker services. So the likes of these guys are having to cut their fees themselves. But I won't talk about that. Yeah, cool. Right. As I said earlier, we're top. In terms of the open positions, we'll talk about HSBC later. Has anyone got any feelings on the ARC Capital, Berkshire Hathaway, or the rougher positions?
Shall we maybe show the platform in real time? I mean, at least for all, what do you think?
Can you,
it's not worth it.
is it loaded up?
The thing is that the changes are, no, click that, no, the changes are so, you know, it's great. The changes are so, I mean, the thing is that because the trade is 50k or 100k, that, I don't know, the difference from one day to the next day is 2, 3, 4, 5,000 quid.
So yeah, that's changed a little bit since last time.
Okay.
Yeah, so we've got obviously HSBC giving us a 4,400 profit,
Okay.
but we'll discuss that one later.
So the first one is our capital, second one is Berkshire Hathaway, and the last one is
Ruffer.
your Ruffle.
Yeah.
And at the moment we are plus 2,000 plus the 6,000 that we made with the two German banks. And can you put TMT, please?
Oh,
I want to see that Alibaba.
well, I think it was consumer then.
Oh,
that's
okay,
the
or
Alibaba.
consumer.
So yeah, these guys, like, they're Alibaba.
It was 15,000.
Where's Alibaba? Did they close?
The first one, probably.
Oh, yeah. Yeah, it was.
Yeah, they
like
were
that.
15,000 up last week.
Yeah, and obviously like Chinese based company, so US-China trade war affected that a lot.
Okay, and one thing that I said last week in the fund meeting is that I want to kind of come up with maybe 5, 10 trade ideas. I mean, kind of more trade ideas is to put the orders, the limit orders in the platform during Christmas time, and kind of try to make them winners. So for that, do them as limit orders, which is I imagine wait for a 5% drop in the markets globally and have those levels to have a much better entry point with a much higher possibility of making money. So if you have as well any trade ideas during Christmas time. And I spoke to Nam last week. The thing is that the next sector meeting will probably be at the beginning of February, which means that we won't have any sector meeting in 2 months,
Yeah.
which is a lot of time because this will end mid-March, beginning of April.
something like that. It ends like when they have the LUUTIS ball. That's when they announce the winner.
Oh, okay.
So, which is normally.
Before Easter?
Yeah.
Oh, no, I don't
I think it was maybe the week after Easter, but then the actual deadline was actually the deadline for the fund was like the last week before the Easter holidays, I think. But yeah,
Okay.
the ball was after Easter. Yeah.
So I mean, we will only have
Yeah, we don't have much
2.5
Yeah.
months.
Which is why sort of my thinking is that obviously we have our short-term positions like the likes of HSBC, and we'll do some stuff for the election as well. But it's good to have like these sort of long-term things. Like in my eyes, our Capital, Berkshire Hathaway, Ruffer, they're all pretty long-term positions. Like they're based on sort of long-term fundamental analysis, in my opinion. So, and obviously if we get massive gains in them, then probably better to cash out. But yeah, I don't see us changing those very much. Yeah, cool. Where's this? Okay. Oh yeah, and also, so if you just look at this, so that's a screenshot from like half an hour ago.
Oh,
But
okay,
I
sorry,
mean-
Matt. I thought it was a bit more.
But then the screenshot that I took like 3 hours ago before that
There we
thing
go.
there was pretty different. So got like Art Capital was positive 300.
Yeah, that screenshot is probably before the
Yeah,
American
before the
market
announcement.
opened.
Rough, not that bad. HSBC's not as good as it was, so if you compare the two, like a lot's changed, but basically it's all I'm saying in there. So yeah, cool. Quick indices update. I've already said this basically, but big drop in S&P 500 today and yesterday. FTSE down 1.9% today as well. And then anyone heard of the VIX before? Anyone know what it is? Well, I've got it there, but yeah, it's a measure of volatility. Biggest jump since August as well. That's just because of the big movements in markets over the past 2 days. Did you want to talk? Do you know anything? I don't know what's happening in the DAX and the Nasdaq. I'm assuming they've all gone down. They've both gone. I think they've both gone down. I don't know about how much.
I think the DAX actually has been pretty flat today.
It's definitely below 13,000 points.
Okay.
And then on Friday it was 13,200, so
Okay.
quite a bit off.
Yeah, we said last week that the maximum level in the Nasdaq is 13,600. So it is still 300, or it was last week 300 points below its historic price, which was maybe a year ago or something like that.
Yeah.
So
Cool.
still the European markets not as strong as the American ones.
Yeah, US markets have outperformed Europe this year.
Since 2009, so it's not big news.
Has anyone heard of this before? So it's called the Warren Buffett moat concept, just something I thought I'd just quickly mention. So it's basically just saying that only invest in a company which has a significant competitive advantage in its relevant sector compared to another company. So competitive advantage meaning a factor that allows firms to provide similar goods and services and outperform those competitors in its profits. Makes sense. Anyone else? Any got questions on that? So just sort of when you come in to look at a company, think what makes these guys different? Why are they better than everybody else? So why should they have higher profits than other people? Essentially. Cool. Right. Quick pitch from me before we go on to the other pitches.
Nice.
Woodford Patient Capital Trust. Anybody heard of it? Anybody heard of Neil Woodford? Anybody know anything about Neil Woodford?
You know that big scandal because he like really fucked up.
Yeah, fucked up big time. Basically, not got a job now. He's actually screwed.
He probably doesn't need
Yeah.
to have a job.
Yeah,
with
no,
all the
I think
money
he's got enough money from before. But basically, he was this big shot fund manager, worked for Invesco for like 20 years or something. So set up on his own in 2014, I think. Basically took a load of investors from Invesco and put it into his own fund. Had a small team of like 20 people working for him. And then at one point they're managing something like £8 billion just between them. There wasn't very many of them. But this year it's all got completely fucked up. And everyone's crying about it. But so yeah, the scandal essentially, because obviously he ran the fund himself. What he was doing was investing in like a lot of unlisted equities, so private companies essentially. And his sort of mandate was he wasn't allowed to have the portfolio above 10% in these unlisted equities. Now, because he'd had a few bad investments in his listed equities, so you've got the value of the listed equities went down, which meant that your unlisted equities was getting closer and closer to that 10%. So it wasn't very heavily properly balanced. So what he had to do was he had to start listing some of his unlisted equities in like Guernsey, which isn't very liquid. Like they're just not liquid in any case. Well, obviously they're liquid because they're private companies, which is all a bit dodgy and things went wrong. But yeah. So it's sort of like a bit of a shift away from like people paying for the name. Like Neil Woodford was a big name. You've got like, other big names like Terry Smith, I think he's called, like Fund Smith is like another big fund. Linsell Train is another big one that performs really well.
now that you are saying that about the small companies, I think the investors should have gone a bit deeper into, I mean, not just, yes, I'm investing my money in this amazing fund manager, but the stocks that the fund was investing in, and realized that these are very, very small stocks and very, very illiquid stocks, and this is a time bomb. So
exactly. And like Neil Woodford just sort of got his reputation from investing in large listed companies that he saw value in, and he did really well from it. But then sort of shifting towards these unlisted equities, didn't work out for him. Okay. So yeah, I'll just skip those questions. So basically, I've spoken before last time about the net asset value with the rougher thing. This is a 48% discount to the actual price, to the price to the net asset value. So you've got the blue line is the price now. So if we bought it now, we'd be paying a price of, I think it's 32, 33 at the minute, and the NAV's like up at 59 or high 50s. Obviously taking a big drop as well. But the whole sort of rationale behind me thinking it's a good investment is basically Schroders have taken on this trust, so they're now managing it, not like officially, but they're sort of just working out now how they're going to do it. But they're not going to give themselves a performance fee until that net asset value gets back up to 77p. So that would be an increase in NAV from say 58 to 77, which is quite a big increase, and the share price should in theory follow that. So I'm just seeing that as pretty good gains.
So I understand, Matt, that if you invest in that trust now, you can make, and if the price goes back up, you can make money without paying any fee.
If they sold it, But obviously sorry, I forgot to mention. So I mentioned earlier that Woodford was invested in a lot of listed companies as well, and there's a 10% thing. That was in his main fund, which was called the Woodford Equity Fund or something. This is a different thing which he set up separately to that. So the Patient Capital Trust basically is investing in, I've got the mandate here. Fund mandate, provide long-term financing to UK companies at an early stage. So it's investing in companies right at the start of their life cycle, basically trying to look for, I don't know, the next Google or somewhere that's going to find the cure for cancer, which they did try and do. They invested in a company to try to find a cure for cancer, but then actually that was one of the big drops actually that led in the fund's share price. So you got this big drop here, which is the Woodford scandal, like March or April 2019. But I think this drop here, like start of the year, was basically because one of the companies I invested in was trying to find a cure for cancer. I went to clinical trials, and it was basically like no, didn't do anything. It just didn't work. So that's just obviously you had to go right down straight away. Yeah, right down straight away. Well,
actually, it is a very interesting idea. You invest in 50 companies and see if one of them becomes the next Amazon or...
Exactly, yeah. And obviously, like the reason for this big decline is the fact that it's got his name to it, and I think that the underlying companies, I don't know, hopefully there should be a big boy in there sooner or later. But obviously, I don't know when that's going to be. It might not be, because the whole Woodford Patient Capital Trust is just because you've got to be patient with the investments. Like they could take 10, 15 years for them to actually find this. So within our time horizon, it might not be that great, but you don't really know. And I think that now that Schroders are taking over, they're renaming it the Schroders UK Public Private Trust. Could lead to, so as I've got the top here, trust share prices increase and more investors are interested in the shares. So I think that although the investors know that it's now being managed by Schroders and not Woodford, I think that when the actual name change comes, you've got a lot of investors will think, oh well, so it is actually being managed by them. They must have a lot of faith in it. They're not just going to take it on knowing that it's going to deteriorate and they're going to have losses from it. Like Schroders don't want to put their own reputation on the line. What else would I want to say about it? So yeah, I've got that thing about the performance fees, 77p NAV, so it's fairly up far from what we've got at the minute. They're not going to, Schroders aren't going to take it on for free, like they're going to want money as well, so they've got to really see that they think that it can get up to that level.
They must have made their numbers and see that everything adds up.
Exactly, yeah. I like they've got like a team-based approach at Schroders as opposed to the staff and manager approach, more like sustainable investment. And also because there's all of these like liquid companies, private companies, the fact they've got a specialist PE team which knows all about that stuff, I think is pretty good. What else have I got? Oh yeah, okay, so a few like risks of the transactions, always good to think about that. So say Schroders wants to realign the portfolio, they think some of the companies aren't worth investing their money in, any transaction costs around that, so in the short term could affect the share price. There's also a fair bit of debt in the trust, and obviously the low levels of liquidity that I mentioned before, so if they did want to sell off some of these companies, they might struggle to.
Yeah, quite a bit.
Well, risk of high volatility. Oh yeah, due to predominant ownership by private investors. So a lot of the people that invested in this company are like people like you or me, or maybe more our parents than us. So yeah, so they're going to need that money sooner than say the likes of, I don't know, your big pension funds that can keep this investment for 15 years with the hope of returns, whereas your parents might need it like to pay for a holiday or whatever, like in a short period of time. So there could be high volatility within the price because of that. Oh yeah, and also so there was altogether there's 3 Woodford funds. There's the equity fund, which is the big one, billions and billions of pounds, and the equity income fund. I think this is right. Yeah, equity income fund, which is a bit smaller, and that fund was invested in this trust. So in that fund, the income fund is being wound up, so they're selling off all the assets. So when that actually happens and they sell off all these assets, it could affect the share price here, because obviously the share price in trust is more supply and demand affected, which could be a bad thing, but obviously I don't think they're going to allow the share price to take an absolute drop. And I think that could actually be weighing on the current price, because there's a risk that they could do that. But I don't think that. I think it's Link. There's a company called Link who are basically in charge of liquidating assets, and I hope that they wouldn't do that, but who knows. Okay, that's my pitch.
Nice, man.
Any questions about
good.
it, let me say them now. And if you any objections to putting the trade on if you think it's too risky.
I think everything has passed. I mean, the worst has passed in all this thing about Neil Woodford. So yeah, could be a good thing.
You said earlier about that time horizon. Do you reckon it would actually, like in the next 4 months, or it would actually pay off?
That's the thing. So like, I think in terms of the underlying companies and actually this trust becoming huge and like finally with the next big thing, I don't think that's going to happen within the next 4 months. But what I do think is that the name change to Schroders can affect it, and also I think obviously the weighing factor of the other fund, the income fund, having a position in that, like if that just gets sorted out, then that could lead the share price to go up. So obviously that the underlying company's increasing values can actually affect the net asset value like first, if that makes sense. Whereas we've still got a 48% discount to the price to the NAV today. So it's more, well, we're not going to be making hundreds and 100%, but in the long term you could. But I think that for the 4 months or 5 months that we've got, you could get close to that net asset value in a minute. But obviously Schroders might suddenly find that one of the companies in there is absolutely screwed as well, and then that'll make everything go down again. So I don't know. But obviously we'll put the 10% stop loss on like we have with everything, so if it does go wrong, then it can't go too wrong. Anything else? Cool. Right. So yeah, Luke messaged me about this short of National Australia Bank. So I'm just going to read out the message to you now.
Is Luke the guy that sits here?
Yeah.
Okay.
Okay, where is it? Okay, I've been watching the stock for NAB for a few days now, and I think we're in a good place to short their stock. The merger of the 2 asset funds looks highly likely, and the bank itself keeps getting embroiled in scandal after scandal. So I think it's a good short opportunity.
Is this the bank about the child exploitation and all of that we read last week?
No, I thought NAB, it could be, I thought NAB was to do with the mergers of the Australian pension funds. Yeah, well, it could be that as well. Given the recent scrutiny surrounding management funds and their practices, it's interesting to see that 2 of the biggest funds in Australia are potentially going to merge. Yeah, they'll have a massive impact on the state of investment. I think markets reacted poorly to this merger between the two companies. It could be that as well. I can't remember what bank that was. The child exploitation. So yeah, has anyone got any thoughts on that? If not, then I'll just put the short on and keep an eye on it. No. Cool. Berkshire Hathaway. I don't really want to ruin like Will's presentation. We can just save it for next term.
Yeah.
So yeah, but we've still got that position open. Okay, HSBC. You good to go?
Ben.
It's just like the same presentation, but like
Yeah, I'll just copy and paste it
yeah.
over.
Cool.
I couldn't fit any
Yeah,
screenshots on the
that's all
slide.
right. So yeah, basically HSBC's got it's got its own PE of 11.45 at the moment, which is equivalent to Citi, which is the next largest bank by assets under management, while Wells Fargo is the next smallest. So Wells Fargo is doing slightly better. But HSBC has a forward PE of 10.47, which shows decreased investor confidence. So it could be an opportunity in that it's got a decreased share price, but for the short term, I think that means the share price is just going to continue to fall, because market prices are based more on the perceptions of the business by investors rather than like the true value of it. HSBC in the news. Oh no, okay. Well, there you go. That's it there. Price earnings. Yeah. So HSBC in the news. It's so Hong Kong is very important to HSBC. So they made about 90% of their profits last year in Asia and Hong Kong. But at the moment, Hong Kong's obviously going through a lot of political uncertainty and a recession. I would argue that it's probably going to last into the foreseeable future. I'm not sure, like no one's really sure that it's going to go into the long run, because I don't think the Chinese government's too happy about everything that's going on. They're probably going to want to end it soon. But yeah, they announced restructuring about a month ago. And recently they've given their staff an extra day off next year to show support for the riots, which could have quite a large backlash from China, which they're quite dependent on. There was like I think it was an aircraft company that did the same, and China completely ruined them by just like retaliation. So it could have some fairly serious effects. And more recently they had a payout scandal with their overdrafts, which it wasn't too significant, but I think again it'll just compound with investor confidence. Here are some earnings estimates. So the blue is the estimates and the orange is the actuals. The most recent year, 2018, which is arguably the most important, they undershot their forecast, which is going to again impact investor confidence, kind of decrease the share price, and they've been fairly unpredictable. If you look here, they haven't really ever been able to accurately be predicted. They're not too consistent. Yeah, and overall this is the downward trend in share price. So yeah, I've got it here. I recommended to short them. And yeah, restructuring's just come at a bit of a difficult time for them. The refocusing on Asia when it's starting to struggle, like it's all dependent on Chinese growth, which is slowing. It's dependent on Hong Kong growth, which is in recession. Yeah, so I don't think it's looking too bright for HSBC in the foreseeable future. And they seem to have a talent for getting in trouble recently. So yeah, I think their share price will continue to slide, but I think I should probably lock in the trade in the next set up, buy back the short in the next maybe few days, because I'm not sure how much longer it's going to last, and you don't really ever know when you're shorting something where it's actually going to go. Mm-hmm. So yeah, that's pretty much it. I think I I didn't. Okay, good. There you go, Gonzalo. Have fun.
Cool, thanks. Nice. Anyone any questions on that? What does everyone think in terms of that short? So I guess the options are to literally close it tomorrow, close it by the end of the week, or within the next week or so, or just keep it ticking over. Like we've made a decent return of like 4.5%, so pretty nice.
My opinion is that I don't know. I see the European market going down at least a bit more.
Yeah.
So I think could be something maybe to keep. I don't know, for at least a couple of weeks.
Yeah.
Rather than close it down tomorrow.
Yeah. What does everyone else think? So I think it's going to be heavily affected, like as you said about with the Hong Kong protest rate. Like what was it, 90% of their profits are in that part of the world. So any development in that's going to affect it a lot.
And something as well that I didn't mention before. What is your opinion, guys, about what could happen before and after the general elections with the FTSE 100, for example? Does anyone have any opinion? I mean, yeah, sure.
Well, I think it would depend a lot on who got elected. I think obviously if Corbyn gets in or there's a hung parliament, obviously there's far more uncertainty. So I think the FTSE will slide a pretty large amount, especially if Corbyn comes in, because I think so many companies have sort of basically plans of what they're going to do if that happens. So maybe take a shift away from the UK, which I think would be pretty bad for the economy.
Okay. Does anyone here agree with a good outcome for stock markets in majority of the Conservative Party, which is quite funny to me? Do you all more or less agree with that? I mean, do you see the market going up with the majority of the Labour market, or of the Labour Party, sorry? Probably not, yeah.
So in terms of actually us investing based on like the general election, I think we sort of need to just determine a strategy, like so we can either just go long on a few, thinking that the Conservatives will get in, and then there'll be like less uncertainty. Everyone knows what's going to happen with Brexit. Boris was supposed to get the deal through, and then the alternative is to short them, thinking that there'll be a hung parliament or that markets won't react as well to Boris getting in as people think, or Labour government, hung parliament, whatever. Or I suppose what you can do is just like short a couple, long a couple, and then hope that it sort of levels out and then you make a profit somewhere in the middle. Sort of like hedging your bets a bit. What do you think?
Could be like wrong, but if you want to like hedge against the Labour government, I think like Corbyn wants to tax all the big companies, like big banks and everything. So if you bet on the smaller banks, I think they would do better in the face of a Corbyn government, because he's only really focused on the big banks that he hates.
Yeah.
And that you'll like want to tax heavily.
Yeah, good point.
I have an opinion with the currency, which I think is so important in the FTSE 100. And is that, I mean, with the Labour government, the pound would go definitely down, and the big exporters in the FTSE 100 would definitely go up. And the opposite, I mean, with a Conservative government, the pound will strengthen against all the currencies, so exporters in the FTSE 100. Not sure what the banks would do, but definitely the exporters would go down if the pound.
Does everyone know why that is, that the pound, the effect on the FTSE? Yeah? Okay, cool.
The thing is that it's a very, very tricky one, because I mean, on Bloomberg TV in the mornings that you have some kind of fund manager there every morning, and they say that, I mean, it's really, really difficult now to bet against anything in the UK because of all this uncertainty, and that it is just better to focus in other markets.
I agree with your point on going longer on the smaller banks, but I'm thinking more from the point of view that for like a short-term strategy. Like I think even those small banks are going to go down if the markets don't like the outcome of the election. So I'm thinking that we basically just need to decide what our strategy is: long, short, mixture. Should we still vote on that? we won't vote, so we don't influence decisions. So hands up for long.
Okay, explain it a bit more again.
So long meaning that we'll just pick 2 banks. I don't know, Barclays and Lloyds. Put it on the day before. If the Conservatives get in, then probably will go up, more certainty. If the Conservatives don't get in and there's a hung parliament or Labour get in, probably going to slide. I don't know though, because then it works against it, because then that'll actually change the pound though, won't it? That would reduce the value of the pound, so it might...
yeah, but it may not that much in the banks.
Yeah.
You know what I mean? So yeah, let's do it that way.
Okay, yeah, we'll do it from that point. Forget about currencies for this purpose.
Yeah, better.
So that's one way. Other way, again, short. Boris gets in, shares go up. Not good for us. Boris doesn't get in, shares go down. Good for us. Or mixture of the two. Hopefully, say like if we get a mixture of the two, say we like short Barclays and go long on Lloyds. Like say like, and say Boris gets in. What did I say? Long on Lloyds, yeah. Say Boris gets in, then Lloyds goes up by like 6%, and then Barclays only goes down by 3%. Oh, then we've made money. Happy days. Then it could work the other way.
Isn't it quite likely that the Conservatives are going to win anyway?
Yeah. Fairly likely. But there's always just... Because basically in the 2017 election, not sure if anyone remembers, but that was predicting a Conservative outright majority the whole way through. And then gradually, like, Labour started sort of picking away at that gap. I think it was like 10% in the polls. And then in the end, ended up being a hung parliament. Conservatives only need like 9 seats or something, not that much, but it wasn't what the polls were. My point is that the polls aren't always right. Like the polls never predicted Trump to win the election, I don't think, in 2016. And I don't think they predicted Brexit either.
The polls were quite accurate on the 2017 election though as well, weren't they?
There was only like one poll that got it right, I think.
Yeah,
I'm not sure what it was.
at the moment, aren't Labour still having issues with the anti-Semitism as well? At the moment,
Yeah.
So
Yeah. I don't know.
I think we should do
Oh,
just...
what-
Oh, yeah.
What do you have?
I was just going to ask, do markets always go up when Conservatives win a majority? Or is it just mostly?
Yeah.
The markets never go up or down depending on something. Sometimes or most of the times.
I think it's just because like Conservatives obviously like their right wing side, their capitalism, like they're sort of lower taxes, that sort of thing. Whereas Labour's more like high taxes, more government involvement, risk of nationalisation. But yeah, obviously not always though. Because if Boris was saying, "Oh, I want a no deal Brexit," and then he won, then that'd be awful for markets.
Yeah.
So yeah. Should we put it to a vote then?
I think we should do just with 2 possibilities.
Okay.
Or going 2 banks long or going 2
fine.
short.
Yeah, that's
rather
fine.
than just say, okay, Lloyds up and Barclays down or something like that.
How do we want to choose the banks?
Good question.
Yeah, good question. Yeah. To be honest, I think that the fundamentals of the bank, like, it's not going to make much difference. I think they're all just going to go down.
We can leave it to Matt. He's good.
I think the only thing what we look into, like, I wouldn't do like HSBC because they're more internationally based. I'd do something that's more UK centric, so like Lloyds or like CYBG, like they're Clydesdale Bank, like they're in Virgin Group as well. It's places that are banks that are UK centric as opposed to banks that are like Barclays and HSBC or something like that are more internationally focused. I think that's what I'll do. If anyone's got a particular bank they think that we should go long or short on or whatever, let me know.
No, but let's put now the name because I think it's better.
Get our guns out. All right.
No, I mean the thing is now we are going to depend on you guys.
Okay, yeah, Lloyds
we
and
need to decide the banks, and you are going to think. Oh, I don't want to think now about the banks. And
yeah, all right. Lloyds and CYBG are the 2 banks we're going to do it on.
okay.
Do you want to go long on both or short on both? Hands up for long. What's that, like 2, or you can count it?
9.
Okay, and hands up for short. Okay, yeah, we'll go long on those two. Let's hope for a Conservative majority. Boris, yeah. Alright, what else have we got? Well, how long are we doing for time? Okay, 5 2. Do you want to go straight to your quiz and do that next time?
Yeah, let's do.
Okay, Gonzalo's going to go through his trading account next time because we don't want to keep you guys much longer than 7 o'clock.
And if anyone is really interested in this right now, I mean, just come to speak to me after the meeting.
Yeah.
So let's go for the.
Oh shit! We had your TD Ameritrade at Charles Schwab.
Oh.
Yeah.
Yeah, nothing for them.
Yeah, that's fine. Yeah, you can sit down, stand up, whatever you want to do.
And it was in the first. Slides, no?
About it the last 2 weeks that the brokers Charles Schwab and TD Ameritrade, which are I think within the top 5 in the brokerage market, especially in the US, have announced that they are going to merger in a $26 billion deal, and which is in order to tackle those low commission fees in the market, for example, or other trading companies, and the market reacted very positively, especially for TD. Shares went up, I think, 17–18% the day after the announcement, and surprisingly, in theory, also for Charles Schwab, also increased their share price in 7–8% during that day, and are still trading, or the market reacted very positively, so it is probably quite likely that this deal is going to get through the regulatory authorities, but there's also still kind of an execution risk because of regulatory authorities, because it can may lower the competition of other brokerage accounts that are brokerage companies that are significantly smaller than TD or Charles Schwab, which can be affected to basically refuse the merger. But in general, it is quite positive on the market, and that they're quite positive that the merger is going to happen. I think latest by Q3 in 2020. And the idea here would be, because of the share prices that are quite high at the moment, to short them for 1 to 2 weeks, whatever, and basically go long as soon as the values are quite fair, or the prices are quite fair, and basically hope that the merger is going to happen and it's going to be approved by the authorities in the US, and this would be basically the idea, but still there's kind of uncertainty about the execution risk, which because of the competition within this industry, within this market. So we've discussed it last week as well, but we're still kind of not really sure how to trade on those two stocks. So initially it would be a short for a couple of weeks, but after then a long. But basically we're hoping for that the merger is going to happen and it's going to be approved by the authorities. So maybe we have a little discussion about that if you have followed this news recently.
Has anybody else read about it? No. So essentially, you've got there's 5 big brokers in the US. These guys are number 1 and number 2, I think. Is that right? I feel like they're number 1 and number 2. So that's why it's such a big thing in the market, because it's literally like, well, Tesco and Asda merging, or well, obviously Sainsbury's and Asda were going to merge, but it got blocked. But like 2 of the biggest guys merging, which basically means that all the guys below, like the 3 guys below, like they're a bit screwed, like they're going to need to consolidate as well. So then this all links to E-Trade, which is number 3, there's like rumours of them getting bought out by Goldman Sachs at the minute. So I've sort of a few options as to whether we trade short term by shorting on those two brokers, hoping that the share price falls back a bit, because obviously the hype about this deal, like share price whoosh. And on the 1st of October, I think it was the 1st of October, all the brokers' share prices plummeted because Charles Schwab, like the industry leader, cut all of their fees to try and be able to compete with the likes of Robinhood. So obviously, if you're not charging many fees, you can't make much profit, can you? So yeah, a lot of those gains, I think, from that merger, I think, were sort of getting back from like the lost share price, the share value from the decline. Do you agree? From the big decline from them reducing their fees.
Oh yeah.
I think that because a lot of that was sort of getting back lost value already. It's my opinion. But yeah. So do you suggest that we, I don't know, 50,000 on each short for a couple of weeks, see what happens, and then maybe go long if it does well, or?
I think maybe this time this could be a good trade to do with technical analysis.
Yeah.
To look for some kind of resistance there.
For both the RSI are above 70, so
both. Okay, so
yes,
definitely a good short.
When it comes to the Bollinger Bands, it's on the upper.
Oh really? Okay.
And above the moving average as well. So yeah, because of the hype, because of the good news about the merger, so in some sort of time it's gonna be decrease again to its fair value, which would be the opportunity to short them.
Yeah,
and
agreed.
Speculation basically. So
cool.
technically it's good now to short them basically.
What we can do is to short them until the RSI goes, I don't know, back to 50, for example, and then go long.
Sounds good to me. So shall we just do, because I'm conscious of like becoming too exposed to like brokers, because it's sort of investing in one company, isn't it, really, like more or less, like they're going to be affected by the same things. So we can do 100 on each, but then we're going to have 10% of our portfolio exposed to US brokers. Then there's obviously the E-Trade suggestion as well. What did you look into E-Trade? What do you think is worth going along on that, the anticipation of possible Goldman Sachs takeover?
I think it's very uncertain, so we don't know really much about it. So it was just like an announcement that Goldman Sachs may buy E-Trade or another brokerage company, but we don't know when and if and who. So
yeah, exactly. Okay.
It would be very speculative to go long on both, on E-Trade and whatever company.
Mm-hmm.
But it's more of a bet than.
Cool. So we'll just go short on those two guys for now, and then we'll keep an eye on it.
The E-Trade one seems a bit more, a lot more uncertain.
Yeah, because like Goldman could just go for one of the other top 5 instead. So yeah, fair. Cool.
Good. So 5 more minutes, guys.
Just quiz quickly.
Grab your phones. Where I am. So go to Kahoot. So this week a bit of easy maths and random questions. Wow. Did you make this math?
No, I didn't.
What's this? No, I don't want this. No, I don't want this.
Has anyone got anything that they'd like us to cover like next term in these sector meetings?
That's a good one.
Or like we can suggest for Harvey to cover in the fund meetings or anything like that. Or different, we can set things up differently if that's better for you guys. which is just okay as it is. Yeah.
Is anyone coming tomorrow to London for the job? Oh, nice, nice.
Yeah, that'd be good. What is it, like looking around Lloyd's office or something? Or what are they doing?
Some kind of speeches, and then we're
Nice.
going to see the trading area or office.
Yeah. You can tell them how we're going long on them for the election. not fake money.
I haven't pretty much said anything today. Just
Oh yeah, sorry, yeah.
No,
Sorry, did I take over to you?
no, not at all. Okay, so we are 3, 6, 9, 12, 15.
I know you were busy with your math stuff, so.
They want to be in charge of
Oh
the-
no.
Go for it. 11, we are 15.
My phone's not working.
Sorry?
My phone's not working.
Okay. Do you want my phone?
No,
Really? Okay. You can win one of those presents, hey?
Is everyone on that wants to be on? Yeah?
That's the second one.
Huh? Are you loading up?
Oh!
Nice.
Okay, so
You on?
ready?
Let's go.
I'll make it big.
Oh.
It is F. Okay. Oh, that's too easy, Matt.
What?
Good guys, that was too easy, that was the warm-up. Sam, you are always on top. This is not as easy as the first one.
Anyone told Gonzal's a math student?
Ooh, only 2. Yeah, you can have 2 modes or 3 modes or 4 modes if you have the same number of kind of maximum occurrences. Ben, is it you? Nice. Oh, people need to think about the answers. Good, good. Lower quartile is divided by 4 and upper one is 3 times the numerator by 4, yes. Oh, this is a tricky one as well. The music is so funny.
Oh, is it this?
Yes. Nice, man. Oh, well done, guys.
Huge on it.
Yeah, variance measures the spread of the data, not central tendency.
Yeah, and obviously variance, like standard deviation, is basically part of that. So in terms of like stock returns, standard deviation sort of, I guess it's a measure of like volatility of the share price. It's also sort of a measure of risk as well. Is it measured? What is it a measure of?
Yeah.
Systematic risk. Systematic risk. Is that right? Is it unsystematic?
No, systematic is the one
Or is it
of
both?
the...
It's both. Do you know?
Beta is for
Yeah.
systematic risk.
Standard deviation is not. Doesn't it also measure like total risk, like unsystematic plus systematic risk? I think. Is that right? Do you know?
I think it's just a measure of volatility and
Okay,
risk
okay.
in general.
Okay. I should know the answer.
Yeah.
I made it. How many of you are economists? Ooh!
I've never heard of the euphoric phase.
Yeah,
What's
euphoric
that
phase, and then going to kind of to down again.
Alright.
Yeah. Let me send you the picture later.
Okay.
Leading to overconfidence or something like that. Good guys.
Okay. What can I explain here? Trade receivables. Who does accounting can explain what that is?
It's like the money you hold from like selling, you like sell your inventory, your stock, and then you don't pay it straight away. So it's like that.
Yeah.
So it's kind of
Yeah. And what's the opposite of that?
payables.
Ah,
Nice. Yeah.
you're going to.
It's when you bought stuff from kind of
Yeah.
Okay.
you owe them.
So obviously on your balance sheet you've got assets and liabilities. One's one and one's the other. Yeah. Cool.
You're going to ruin the next question.
Oh, so have I ruined it?
No, maybe not. I'm not sure.
Sorry. Oh yeah, sorry.
Good.
Get that on the way. You got that wrong. How'd you get that wrong? You two. Are you playing that? Nah, I didn't trick.
Well, this one is tricky. I didn't want to put all of them as easy as the first one. Yeah, that is the order.
Do you want to explain what a warrant is?
Warrant is kind of an option that can be.
Oh, is it like a stock option, like for
Yes.
for employees? I'm not sure what a warrant is, to be honest, but
I need to revise it.
yeah. So,
I just took the question with the answers.
so you don't know the difference between preference and ordinary shares? Anybody else?
No voting rights on preferred shares, fixed dividend that has to be paid.
Yeah. Yeah. So yeah, basically it. And obviously it's higher in this. There's different ways of things of calling it. Like I think I've been taught like the absolute priority rule. So like you've got like your debt, your bondholders get paid first, then you've got your preference shareholders, then your ordinary shareholders. Yeah. So yeah, basically just the company gets liquidated. That's what happens. Obviously, yeah, in the likes of Woodford Patient Capital Trust, like they've got a lot of debt. So if it does get liquidated, those guys will get paid first, and then like people like us. Yeah, nice.
Well done, guys.
Anybody know why that is? What it means? It's like what we were discussing earlier.
I always think the discount as if you go to a supermarket and find something with a discount that you pay less
Yeah.
of what you should be paying.
Yeah, exactly.
So
So yeah, so trading below 100. So well, you pay £100 for it, and then now the price is less than that for whatever reason. Is that the end?
no, I think the last one. Yeah, last one, and we are done, guys.
One that shows.
Think about this one, man. This one is good. Yes. So at that time we bought the bond at a premium of £5, let's say.
Yeah.
So if the bond matures at that time, we get the £100, which is the redemption value. So we just lost £5. So there we are.
Let's see who won.
And the winner is
6 out of 10.
Sam, always at the top.
Plus third.
Ben, again second. Ah, Jack. Oh,
Well done, Jack. Alright, well done, Jack. Okay.
choose one of these. As a Christmas present.
Alright, well, okay, so just to summarise quickly, so I'll get the Woodford Patient Capital Trust trade put on. 100,000. I'll short TD Ameritrade and Charles Schwab 50,000 each. Potential to close it after a couple of weeks and then maybe go long on it. I'll go long on Lloyds and CYBG. Make sure that's on before the election, day of the election.
The portfolio is gonna look really interesting.
Yeah, and then I'm going to short National Australia Bank based on that, and HSBC. We're going to keep it on for now. Maybe we could like decide what to do that in the fund meeting on Tuesday. And
Is there a fund meeting next week?
yeah, next Tuesday. So yeah, that's it. If you guys get any trade ideas or see one of the positions we've got open and like some news has come out, something's happened, I'm not going to be tracking it every day and I can't have time to do that. So if you guys notice anything, drop me a message over Christmas or go onto our message whenever you want and we can act upon it as quickly as we can.
Yeah.
Yeah, cool. Hopefully see you next week at the fund meeting.
Thank you for coming,
Cheers,
guys.
Thanks for attending this term.
Good.
Yeah, Zarfin. All right.